Hello everyone and welcome back to Sudden Wealth. I hope you're having a wonderful day. By the way, I'm recording this on Tuesday, so if there was a massive event on Wednesday, I apologize. I'm traveling for work, so I couldn't make a more updated video. In any case, guys, if you do enjoy the content, please consider dropping that like and subscribe, and let me know in the comment sections if you'd like me to go live maybe over the weekend or next week. And I will try to pencil in some more lives now going forward. So thank you once again. Now, I wanted to talk about two things, which to me is a bit of a different video. This is a bit more macro trend that I'm looking at. And you know my position on this. There's always a lot of stuff happening in the world. A lot of reports come out every week. A lot of stuff happens every week. Now, I do believe inflation, anything that comes softer, great. Anything that comes hotter, depends on how much. If it's 0.1, 0.2 is one thing. If you start to really beat up inflation far too much, then it can be problematic for the markets. Once again, look at that treasury market. The bond market will tell you what's going to happen to the other market. So if that is very unstable, selling off constantly, going down 1% per day, I don't care if stocks look stable, they will follow, a couple of days later. That's it. If we are going up and we are stable on the bond market, more likely than not, we're actually going to see stocks rising, maybe not that day, maybe not the following day, but throughout the course of the next few weeks. This is just my opinion, but this is what I'm seeing. So, in that context, yes, better than expected inflation numbers, great. A bit slower headline job reports, great for the market. But there are two events coming, which to me matter more, a bit also for the medium term, not just the short term, which are two events. That's it. So as you know, I like to tune out the noise, try to focus on major things. I'm not looking at the elections yet, still far away. I'm talking about a bit more recent than that. So you have the Bitcoin halving, so that is for the crypto market. I've talked extensively about it. So let's go for the broader market. Number one, Fed meeting. Pay attention to rhetoric, to whatever they say about stopping quantitative tightening. Quantitative tightening means the Fed is selling bonds that they have in their balance sheets. So you have Treasury selling bonds to finance deficits, the budget, trade deficits, etc., finance wars, all of that. You have China, Russia, Saudi Arabia, blah, 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 selling bonds to kind of de-dollarize their dependence from the dollar system. You have some allies in Europe also selling bonds. And now the Fed, who used to be the biggest buyer of bonds, is also now selling bonds. So there's a lot of selling going around. And quantitative tightening is exactly that. So the Fed has a balance sheet, they sell bonds into the market, so they become a part of the problem, if you will. Now, if you listen to anything where the Fed is suggesting to stop QT, meaning stop selling bonds, I'm not talking about cutting rates, I'm saying about stop selling bonds. That I think will be particularly bullish for the markets. Now, does that mean that on the same day the stocks will go up 10%? No, that's not what I'm saying. What I'm saying is that it gives me clear guideline that most likely the environment is going to be good for risk assets for 3 to 6 months. And that's how far as I go. The rest, you need a bit more nuance when you get there. So let's not get too far away in the future. So number one is listen to what the Fed says about quantitative tightening, if anything. Particularly stopping it, that's the point. Number two is productivity. So we do have productivity reports that come around. What I would like to see is an explosion in productivity, or at least a strong upward movement, driven by artificial intelligence. You see, I was reading the other day, you have these big data analytic companies. And they were talking about the benefits of artificial intelligence in their processes. And they were giving several examples, but this one particularly I listened to. You're saying Yeah, we have a lot of tasks, really a lot of very important tasks that used to take 8 hours to perform and now take 10 minutes. I mean, think about it. That is, let's say, so that is 60 minutes in 1 hour, so that's a sixfold. Sixfold times 8, that's a 48-fold, 48 times improvement on productivity. I mean, that's a massive, this is the point that I was referring the other day. I cannot really gauge the impact of AI. So I don't pretend to be a specialist and to be, oh yeah, I have perfect idea of what's going to happen. No, I don't have. But this is what I want to see. So I want to see higher and higher productivity driven by artificial intelligence to fight the zombie companies environment that low interest rates and money printing has created over the years. So the idea being AI is so productive that we can start erasing some of the mistakes of the past before the government mounts new mistakes on top. The point is the key is all this temporary gap between AI productivity being so high that it basically beats the previous mistakes of the past before the government pays attention and says, oh my God, artificial intelligence is great. How can we screw people since now we have another, get out of jail free card? This is how they think. So let's say if you have a problem of level 2 and AI is a solution of level 6, then the government will try to come up with a problem of level 7 or 8. That's how governments are. Never forget, think about the purpose of an economy. What is the purpose of an economy? Destroy jobs and basically, destroy jobs and lower cost of living for its population. That's it. So basically, with improvements on productivity, you get lower costs on the goods and services, and with improvements in technology, you need less and less jobs. What does the government want to create? Inflation and more jobs. So the opposite of why basically economies exist. And with that, guys, today is going to be a bit of a shorter video. And I'll catch you in the next one. Don't forget to like and subscribe if you do enjoy the content, and I'll see you next time.